Hey everyone, Sebastian here. So I wanted to talk about something different today than what I normally cover, which is cryptocurrencies. But I wanted to talk about are we in a housing market bubble? If you find these videos useful, this is the only time I'm going to ask you guys. Please consider subscribing. It helps me out tremendously. And hit the like button for the YouTube algorithm. So let's get into it here. So we have Vox talking about, is there a housing bubble? We have Forbes, 3 reasons why the real estate market boom is not in a bubble. And then we also have Barron's, housing prices are going up, must they crash? So I did a bunch of research on this topic. I wanted to share with you guys some of my thoughts behind it and what I'm looking at here. So here are my notes, kind of things that I wanted to cover with you guys. So housing market, are we in a bubble? I don't think we are in a bubble just yet. I think there's just supply and demand issues right now. And this is kind of what I'm thinking is behind it all based on what I've read and listened to people on the news, obviously talking about it, professionals, economists, and all that. So here are my thoughts. In this time around, there is no credit boom. So in 2008 crash, when the housing market crashed, we had a huge speculation going on in the market as far as housing is concerned. How far they're going to go up. We had, people that were making cash on their businesses were just getting loans without verification, things like that. So in 2008, if we look at it here, some of the things that I remember is, excuse me, is that we had no income verification, right? So the banks weren't really looking into the verification of incomes. And then we also had subprime loans, which were packaged with the rest of the loans given out to credit rating agencies, and they were giving, like AAA rating, but all they had was a bunch of crap in there as well. And this is what really caused the market in 2008 to crash. So the thinking behind it this time around is banks are a lot more stricter as far as what they're loaning out, how much they're loaning out, verifying like crazy what people are making. Just to give you guys an example, a couple months ago, it was about 8 months ago, I refinanced my house. I mean, the bank, all the way up through the closing, kept checking with my employer to see if I was employed. They wanted to see the last 2 weeks of bank statements, everything. I mean, they were dotting the I's and crossing the T's on everything. They wanted to make sure that even though I already had the loan, I was just refinancing, that I could afford on the refinance, even though it was a lower loan than the previous loan that I got for it. So that's just kind of a little bit on the background on that. There's also no speculation in the market this time around, like we had last time. A lot of people were buying homes, waiting a couple months to a year, cashing out, buying more houses, fixing them up, flipping them, selling them, and all this crazy stuff that was going on. You also heard, obviously, stories where people that were just getting paid cash and had no verification of the income on that, they were buying multiple homes and things like that. So it was just a crazy market at that time. That's why we had the bubble, and eventually it burst because of the subprime loans that we had here. We had Michael Burry. Obviously, he's famous now for his big short on it, where he made a lot of money shorting the market, saying that these subprime loans and these package loans were all junk. So that's the main difference that I see not the main difference, but that's one of the differences that I see this time around. There isn't a lot of the speculation that we've had in the past. Next thing that I want to kind of discuss a little bit is right now we have a huge shortage of homes. And there's a lot of reasons why that is. A lot of it has to do with the pandemic and things like that. So let's get into that right now. So huge shortage of homes, and then here's the reason for it. Pandemic, obviously. With the pandemic, we had a lot of housing that were builders that were stopping building because they didn't know what was going on. We also had a lot of large cities that were closing all the parks, attractions, People started working from home. Kids even were schooled at home for a long period of time. My kids were, one of my sons was at home for, probably through 6 months of the school year. He was at home with my wife, having to basically teach him with the interaction with the school teachers online. So a lot of the people figured out that if they can work anywhere, they're better off working in a bigger house, not something that they can get in living in bigger cities like Chicago, New York, Los Angeles, Houston, Dallas. Those big cities, they have a lot of great attractions, but the downside is that you're most likely living in a condo or you're renting a place. You're not having as much yard to play around in for your kids and everything else. So a lot of people, I believe, figured out that they could work from anywhere, that people that could work from anywhere felt that it was best if they could move into the suburbs where you could get a lot more, obviously, for the money. So you get more house. You also get a yard where your kids can play. You get more things you can do outside than you would especially in a big city. Where I live in the Chicagoland area, I mean, the city even closed down the Chicago river, not the Riverwalk, but the lakefront. So, I mean, there was no biking, no running. You couldn't do anything on the lakefront. So people were basically stuck at home the whole time. So that is a big contributor factor that drove the demand for housing up. New home construction also fell. During the pandemic, a lot of builders didn't know what was going to happen with the economy. So a lot of the construction efforts that were in place were put on hold. Any new builds that were going to be going on were put on hold until everybody figured everything out with the pandemic. Another thing that happened was factories. Factories that created wood, metal, all those things, they were working either one shift where they used to work 2 or 3 shifts. So the production was greatly impacted where it went down. The outcome of all of this was people started looking to move into the suburbs, right? So you have a huge influx of people that lived in the cities are moving out into the suburbs to have a home with a yard, to do projects around the house. Their expenditures dropped because you couldn't really do anything. You couldn't go to the movie theaters. You couldn't go to plays. You couldn't do sporting events. All these things that you could go before, people weren't doing now. You couldn't even go out to restaurants for a time being. You had to order everything out. So that dropped their expenditures, which increased their savings. So the amount of money that they were able to save went up while their expenditures went down. So people started basically being cash rich, right, in a bank account. The other thing that happened after that is the government had a stimulus program. So during that stimulus program, if you were a family with 2 kids or so, you probably ended up around $10,000 in extra stimulus for that period. So that increased your savings, which allowed you to buy more of a house and things like that. For during that time period, if you saved all the money or if you paid off your debt, things like that, you were able to get a bigger house or put a bigger down payment on a house. So that helped out the demand, right? So more savings, more demand. People started moving out into the cities, from the cities into the suburbs. So the government stimulus increased individual savings accounts, which spurred the demand for housing. Supply was low to start. Ever since we had the 2008 crash, the supply has not been at the same point at the same point it was in 2008. So we are just now getting back to where we were in 2019, part of 2020. We were just getting back to where we were with the supply in 2008. So the supply was low to begin with. So we're just now catching up. So this is one of the reasons. So supply was low to start. So we got that one. During the pandemic, decreased production for new homes, lumber, metal, etc. Everything got pretty much slowed down, way down, to the point where now we had huge runs on lumber and metal, where lumber went up in price almost 300% over the same period a year ago. So there's a demand for everything, and the prices have gone up substantially. The other thing is interest rates are historically low. They are probably the lowest they've been ever. My dad, when he bought his first home, I think his interest rate that he had on the house that he bought was like 12 or 13%. And then this was back in the early 90s, I want to say, late 80s, early 90s when we bought our first house. And every year the interest rates have been going down. He would refinance to help out lower the payments and everything else. But where we're at right now, we're at about 2.8 to probably around 3%, depending on your FICO credit score, which makes home buying more affordable than ever in the history of this country. You're able to, obviously, since you have a lower interest rate, you're paying less interest. You're able to afford more of a house. That's why it's making it more affordable than ever before. So in conclusion, I think that we're not in a bubble just yet because of all of these things that we talked about, but because it's basically, all of it is based on supply and demand. So the supply is way down, but the demand is way up. So as demand goes up, you're going to be paying more for it. The house that I'm in right now, like I said, I refinanced last year, about 8 months ago. It appraised out for about $350,000. This time around, I was looking just on the market, talking to a realtor. They're saying I could easily get $390,000 to $400,000, which is almost a 14% increase in just 8 months. So things are going a little nuts right now with the pricing. You also have people that are, in bidding wars to buy houses. They're saying that they will honor the sell price even if the appraisal comes in lower, so they have to put down more money. So those are all things based on supply and demand. The more demand there is and less of a supply, you're going to have those types of things where people are fighting to get the property because they do want to get into it, to get out of the cities, to be able to have a nicer yard, nicer home, and to take care of their kids the best they can, because they've learned from this pandemic that living in the city is great, but if anything happens, you're basically shut into your own condo or apartment that you're living in. Even if you have a house, you're going to have a small yard back there. So I think we're just now, the only thing that might happen in the coming months is obviously the interest rates. Interest rates are possibly going to go up based on inflation. So inflation, if it's not transitory, right, like they're saying right now that it's transitory. Inflation is transitory at the current time. If that is the case, then interest rates will continue to stay low. But if inflation is not transitory, then interest rates are going to go up because they don't want to have inflation over, they want to keep it between 2 and 3% annual inflation. So that's the only thing that could probably slow down or lower pricing or stabilize the pricing market on the new homes or regular homes, is if the inflation rate goes up. Otherwise, I think we're going to keep going like this until supply, meets up with demand. And at that point, we'll have an equilibrium where the prices will stabilize more or less, and we'll see our regular 1 to 3% increase in home values over the annually. But that's just my thinking on it. I'd love to hear what you guys have to think about it, or what your thoughts are on it. Share your thoughts and comments down below. I'll obviously read them when you guys do post them. But I just want to know what you guys think. Are we in a bubble? Are we not in a bubble? Based on what I'm seeing right now, we're not in a bubble yet, but I could be wrong. Time will only tell if we do pop. I don't think we're going to pop again where we popped like in 2008, where we popped, what was it, 40, 50% in some regions. But we may pop 5, 10% to bring it down in line with what's expected. And I think we'll see that in possibly the next 6 to 12 to 24 months, definitely within the next 2 years, based on where inflation goes, interest rates go. And if interest rates go higher, then obviously we're going to see pricing come down a little bit and demand go down as well. But at the time, right now, I don't see a bubble just yet. It's just basic supply and demand. I will have another video coming out later on this week, possibly tomorrow, where I discuss, is it a good time right now to buy, or if you should hold off. So subscribe if you want to get notified of new videos. I do appreciate you guys watching. Thank you so much, and until next time.